Chris D here, head systems trader at Macro Ops. Christopher, that is. I've been saying Chris D for so long. I go by Chris D, Chris D Macro. And so, first things first, if you did not like or subscribe yesterday, I saw how many people saw this video. You didn't like it. Like it and I'll keep doing it. That helps kind of get it out there to more people, right? And if you subscribe, then you don't have to wait for me to tell you on Twitter or forget or something like that. You just get notified when I put up a video. And if you actually ring that little bell down there, you'll get an email when it happens. Okay, cool. So let's go over, we're going to talk about trading bull volatile market, day trading bull volatile market and the ND Nasdaq. So let's go to a daily real quick. And remember when we, in last night's video, I would go through and I would scan all the different ones. Well, we're clearly in a bull volatile regime, and the way it traded this last few days, that is very indicative of bull volatile. Now, the interesting thing about bull volatile is you can stay in bull volatile for a heck of a long time, and I'm going to show my example. This is earlier this year. It went in, Bitcoin went into bull volatile and lasted for a while, kept trending. It was volatile, but it kept trending and trending and trending and going higher until you saw that massive volatility, and that's when we got a top, right? So what I'm going to talk about is some of the characteristics of a bull volatile market. Get to where we're at here. Some of the characteristics of the daily bull market. Bull volatile, and I'm going to cover how to get into a late trade. If the market's already taken off, how do you safely get in? Okay, so this is the Nasdaq trade today. I got a vertical line here. This shows where the market opened. Here, I'm in Central Time Zone in Mexico today, and we open. We have a little run, and it dumps. Okay, now remember, you want to have volatility in, you want to buy weakness in this sort of place. But actually, it's good to know that you can short here, you can short in these markets as well. So all this information you have previous, right? All this back here is all previous information you have at your disposal. So you don't have to just look at this part of the chart and guess what it's going to do. You have the ability to see this other information. So what I like to do is, I'll put the kind of like the overnight highs there, and you'll see it kind of went up and came down, and then the market opens. We go up, bang around, nothing really happens, and gives it up. Okay, so it's already rallied quite a bit. It looks a little interesting. So we're just paying attention to price action here at this point. We're not really, if we're looking at it from here, we're looking at it like this is what the market looks like. We got a bunch of weakness. Bulls were in control. Bears were in control. Now we're hitting this bottom part, and we're starting to bounce off that weakness, okay? Or off that support line. Okay, so that's interesting. I put in a double bottom, so I go ahead and I'll put a buy stop here to get long. And that's what I did. And we caught a nice big move. Runs up into the new all-time highs, basically breaks out all-time highs, and then just sits there. It drifts higher all day long. And then, big push into the close, and then it dumps. So what am I looking to do? So if I get, you can see this was an all-time high break. So that's why that bar looks a little crazy. That's pretty common breakout type, volatility. Stuff gets crazy and, it just gets wild. Okay, so I'm in, my stop's still here. I got nothing. And then we get this move. So I'm moving my stop to break even. And then I'm probably going to raise it up to this area here along the way. But it gets up here, and then we get to what I call first look back. And it's usually where we get some consolidation. And the market wants to determine what it's going to do. Is it going to take another leg higher? Is it going to keep taking stabs at going higher? Or is it just going to sit there? It's first look back is the first place that it's going to give you that. It's going to confirm. So something you could do knowing this information is you buy, let's say, 2 contracts down here. And when first look back goes, because statistically first look back is something that says, hey, we've confirmed we're going higher. We really want to go higher. There's a much higher probability here. So instead of adding 2 contracts, you add 4 contracts here, for example. And yeah, we get another kind of weakness. And then what I like to do, so I would have gotten here and then it pulls back and I'm going to raise my stop up here. So yeah, I'm looking at more contracts, but I've already locked in this big thing. So what I like to do here is I like to look for these bull flags or these up and higher lows. So what we want to notice is we have the whole way through, we've got these higher lows and higher highs, okay? So all that's telling me is that saying keep going with your plan, you can get in. Now, if I just showed up to work today and I saw this had already happened, I would have said, okay, first entry is going to be first look back. My stop's going to be tight, so it's not going to be a big runner, but that means that I can use much bigger position sizing because it's a tight stop. So up, pulls back, doesn't stop me out. Up, pulls back, doesn't stop me out. So you start to see this little pattern, and so you can either bang around there, short here, buy here, short here, buy here. Again, we're in a bull volatile, so shorts are actually a lot more doable in this environment. But the way I look at it is I want to be long until I don't have to be, because bulls took clear control and they're still taking control. They're not blasting to the moon, but they're constantly just bid. Little sell off, 1, 2, 3 up, 1, 2, 3, 4, 5. Really tight candles down, couple of big ones up, down, couple up, down. So let's say you buy 2, you can add 4 here, but let's say you just add another 2, add another 2, add another 2, add another 2. So your price basis goes from here to, it's probably looking like right around here to where you're fully, and now you have, if you're doing 2 contracts per trade or 1 or whatever, you've added 5 times. So when this happens, you get your blow off, you can raise your stop at each level of the way, so you get your stop up to here. And when this thing starts happening, you just kind of let it sit. And what I did was I saw this weakness here. I was like, okay. I was expecting it to turn somewhere in there, my usual looking for a bull flag here, especially after that strength. But it's ran that much. Bulls are going to get tired. There's going to be less bulls to buy up here, and a lot of bears are going to be, ready to go. So this thing happened, and I just exited. I mean, we were at the last 10 or 15 minutes of the market, and it just started to dump. And I could see that it was dumping, so I got out like right in here, which I would have just got out, a little bit lower anyway. But I just locked in a little bit more profit. And, so you'll notice none of these were as bearish as 1, 2, 3, and then a big one. None of those were. So what's that telling me? That's telling me the bears have gained control and bulls are going to start taking profits. So anytime you're playing with the top of a big range and you're top of a big move, it's weak. It's weak. It has the power to blast off, but at the same time, especially being in a bull volatile, it has the ability to move rather quickly down. Now, there's nothing up here that would tell me in price action to start looking to go short. We're at all-time highs, and 9,000 was not that far away. It was within sight. So when I saw this pull back, I thought, okay, they're going to pull it back, scare people out, and they're going to rip it to 9 into the close just to get the headline. And when this happened, I was like, okay, that's not what's happening. I can tell that bears have taken control. Something's going on here. It turned out there was some news or something like that that was actually just BS news, which you can see once it kind of bounces back up, and you can see that news headlines has quick reaction, but trying to if you're playing the news headline, you are trying to do this. You're trying to short Nasdaq 25 points away from 9,000 and already up big on the day and already up very big from the overnight major reversal. So you're stepping in front of a steam train to try to catch a short, and you probably shorted here, got stopped out, probably shorted here, got stopped out, probably shorted here, probably shorted here. By the time this happened, you probably weren't ready to short anymore. You were done because there's nothing else except a measured move ahead of it. So the thing about bull volatile is it is going to be high. This is where tops come in. Tops can last for years, or bull volatiles can last for years. So what's nice about having a bull volatile regime is you're not just buying every little dip. You have to be good. You have to be a lot better in a bull volatile. Also, the moves are much bigger. You can see these candles, really big candles. This one here, 89.06 down to 88.73. So over, like almost 30-point candle in 5 minutes. Another one. It was that's big volatility. So what I like to do during bull volatiles is I'll widen my stops on my initial positions, and then just so that I don't get shaken out, and I use smaller position sizing, because if we're in bull quiet, it may end up around here at the end of the day, but it's going to drift to get there. If we're in bull volatile, it's going to hit it quick. So if normally I would take 2 contracts, or my sizing tells me to take 8 or whatever, I'll cut it in half, and I'll look to add on weakness, so that I can build up a position and then maybe get a chance at one of these. But at the same time, I'm also looking for reasons to get out. So when we start seeing these higher lows and higher highs, that's just confirmation that we're going to continue higher. Bulls still own the ball. They're still in control. If this was higher highs and higher lows, or lower highs and lower lows, I would have got out there, and I would have only had a smaller position to do it. So that's covering bull volatile and day trading, intraday trading, the bull volatile, and just some characteristics of it. Today was an unusual day, but the thing about bull volatile is this is when unusual news starts to happen. This is when the news cycle gets a lot hotter. This is when things get ramped up, and people start getting really nervous. And this is that wall of worry. You get a big down day and everybody thinks it's done, and they start shorting, and then it turns around, and it may rip down in a day real quick, have a strong reversal, and then head off to new highs. So that's a lot more indicative of, like, you can see this reversal we had down here. There's a lot of selling, and then boom, on a dime turned, and it pretty much just kept going. So that's day trading bull volatile. Now, there's a lot of different setups that happen in here. What I suggest is learn price action. It's really important. It's not about all the great indicators and all these other signals, because all they're doing is interpreting what price action is telling you. But if you look at this chart, it's very easy to see that these white bars are saying bulls are in control. These are all bull bars, right? And you see a lot less bear bars in here. This one was prominent, so bears took control. But you can see, if you were to count how many bars were bull bars versus black bear bars, you would have an overwhelming number of up moves. So keep that in mind as you are trading this. If you're not already, follow me on Twitter at Chris D Macro. Again, like and subscribe and ring that bell down below. Comment with any questions you have about trading this regime, and any of the other things. Check out the other videos, and everybody have a great day.